in the microwave. I'll heat it up.
$1,000 here to break down what we can expect in 2022 is Glenn Kelman, the CEO of Redfin. Glenn, great to see you and Happy New Year.
I lost so much money on Redfin.
But I can see why when home prices are up 14.6% year-over-year in December. Pretty astonishing.
Okay. Yes, it is. It's still on a tear. The housing market won't give up. People are starting to worry about inflation, though.
Are you concerned? Has it been too hot? Because I'm interested in some of the notes you shared.
Thank you for the likes, Tyler.
It kept soaring even as transaction volume fell, which can be occasionally an ominous sign.
Well, inventory has just been so low. That's been the gating factor on sales volume. And now you have about 3/4 of home buyers being significantly worried about inflation. For some people, that means they want to hurry up and try to buy a home before interest rates increase, but others are starting to step back from the market. We have done an unusual number of consultations coming into this home buying season with people who want to prepare their homes to list. So we're expecting to see more inventory for the first time in about a year, and that should drive more sales. But my guess is that the housing market will have a shorter season than usual because interest rates are going to start increasing through 2022.
And in terms of where things remain...
Wow, DraftKings is going down even more.
Florida. Oh my gosh. Florida. Yeah. Everybody's leaving New York for Florida. Both Tampa and Miami. So New York is the #1 origin city for people moving, and Miami is the #1 destination of the 10 hottest neighborhoods in America. 5 of them are in Florida. So we're seeing it on both coasts. It's been incredible, both the Gulf side and the Atlantic side. Florida just has low taxes. People are drawn to the warm weather, especially this time of year. The migration has been intense.
What's up, man?
We heard the same thing from a real estate developer.
Thank you for coming back on the live.
Doubling, tripling down in Miami, especially.
153 followers, man. We got to get you back to 1,000 so you can go live again.
45% or so over the last year, when things are so strong in the market.
Oh man, such a tough question. Well, I think
snowing
you
in
have to
Denmark.
answer the question about why the stock was so high in the first place. So Redfin stock went up from $10 a share to $90 a share, and now it's in the 40s or the 30s. I haven't checked today. But fundamentally, the business is growing very fast, 30 to 50%, one quarter after another. We're getting increasing leverage over our operating expenses. We're taking market share. We're delivering a fantastic customer proposition. So all we can do is to build the business and getting better and better at delivering fantastic
service. Yeah, it definitely takes time to get your 1,000 back.
And the street's going to reward that.
Glenn, going back to the broader housing market, you said we're going to have a shorter season this year as people try and rush to get ahead of rates going up. What happens when we get to that moment? Is it a big correction for the market? Is it a plateauing? Are you fearful of a major correction?
Yo, crypto,
I don't think we're going
Tom.
to see anything like 2008 just because people aren't over
Feel free to join the live here.
So the people who are buying houses now can afford them. Their credit ratings are high. We're unlikely to see a major wave of foreclosures. What you will instead see is just a slowing in home buying demand in the second half of the year if interest rates get above, say, 3.5% for a mortgage. And so my guess is that we'll see a repeat of 2018 when rates increased in the second half of 2018. There was a step back in home buying demand, but because inventory is so low, I don't think that there's going to be a significant step back in prices.
Okay, Andrew Tate. I'll take a look at him.
The past 2 years, that's unrealistic.
Let me take a screenshot.
But I think
I took a screenshot just in case if I forget.
Reasonable home buying demand. We're still way
Thank you for the follow, Lewis.
7 million units of sales.
Thank you very much for the follow.
That pace is probably going to come down at least 1 or 2 notches.
What about rents, Glenn, which have also soared, and as you know,
yes, Annie.
Component of inflation
I will.
Country. Do they keep going up too?
Well, some more inventory is coming online, so I think rents are going to continue to increase, but not at the rate we saw over the past 2 years. The landlords were just dying to raise rents when there was this eviction moratorium, and they finally got a shot at doing so, and they sent them through the roof.
Okay.
But we're not going to see the same type of rate increases in 2022 that we saw in 2021.
Okay.
People aren't just going to be able to afford it.
I will.
Glenn, what's your take on lumber prices?
I'm not hungry. Give me like 30 minutes and then I'll do it.
Sort of November-y time, and now they're soaring once again. And whether, again, that signals some unhealthy action in the broader residential market.
Well, I think it just signals that home builders are trying to build as many homes as they possibly can.
AMC is the only
The whole
stock you
economy is in
need.
such a jam. We've got all these ships piled up outside of every harbor.
AMC is
it's
getting
just hard to
crushed
get
right
the
now. What are you
goods in
talking
the United
about?
States and to get the lumber to the construction sites. So the fact that people want to buy homes, we can try to spin that as a bad thing, but I think it's a good thing. And the fact that more homes are being built is also a good thing. So the challenge here is just to match supply and demand. And right now the economy is just in this really janky place where lots of people want something and we're trying to get the goods to them. And when we do that, I think we're going to have a very
The pain is
healthy housing
temporary. Wow, man, you are a true AMC bull.
Do you mean in prices or sales volume?
Sales. I mean, just the strength of the market in general, I guess.
I think we're likely to have strong sales in 22. My guess is they won't be quite as strong as they were in 21. I think prices will be stable. They may increase modestly because there's such an inventory shortage. You know, for you to imagine that housing prices come down, you kind of have to imagine that the price of other goods will also come down, and that doesn't seem likely right now. So I just think it's a steady as she goes market. I know that doesn't make much
Boy, I'm not sick.
for you. I'll try to be more exciting on my next appearance. Neither predict an apocalypse or the most amazing.
I'll come in like an hour, okay?
But it's just going to be a good housing market. It might be a little short.
We're watching the Redfin CEO talk about the housing market.
Exciting. And your enthusiasm and your performance make it so. Glenn, thank you.
Okay,
Never
I will.
disappoint.
I will wash the dishes.
Appreciate it. You too, and Happy New Year. Up next, Mike Santoli heading to the telestrator with a look at the shocking number of Americans who are quitting their jobs. The
Dang.
latest report we got today from the labor market. And later, big supply chain concerns. COVID outbreak weighing on one of China's top ports. We'll discuss what's at stake when Closing Bell comes back.
Oh my. Supply chain. Oh my God. Boo-hoo. And then we got fast money next.
Look like we're a little bit spring-loaded for a comeback. This is the inventory to sales ratio. So look how low inventory.
Oh my God, that's freaking hilarious. Best comment ever, Tyler.
We've had and those supply problems as well. But just by rebuilding inventories coming into this year, clearly should be a bit of a tailwind for manufacturing, for imports, and things like that. So this is one of the reasons, or two of the reasons, why I think a lot of folks feel as if this current, Omicron surge is not necessarily going to knock the underlying economic momentum off course just yet, guys.
I wonder also if it filters into the whole inflation story and what we saw today in bond yields, and that is, despite the weaker manufacturing numbers and prices paid there, the quits data and the JOLTS data shows that wage inflation could be staying with us. As we get these kind of numbers of quitters, employers are going to have to increase wages and salaries.
Yeah, the Goldman Sachs wage tracker, I mean, it looks like a stock you'd want to buy because it's breaking out in terms of, on a multi-decade frame up around about 4%. And things like that. So that piece of it for sure is going to get the Fed's attention. Big question, of course, is to just whether we get through the next couple of months. We have very easy comparisons for the inflation data, lapping some quarters, some years when we had very, very low prints. And we'll see what the going rate is. They're going to get done with the taper, see where things stand then.
Thank you. Up next, a COVID outbreak shutting down a major Chinese port. We'll break down what this means for the struggling global supply chain.
Oh no, they shut down a port. Yeah, I wonder how people are able to quit and there's no extra government money, but I don't know.
Pampers, the number one.
All right, we don't watch ads on this. Let's see what happened to the supply chain in China.
Logistics sources that this is really, it's really a hot mess.
Yeah, there you go. Online jobs.
Trying to get the containers in or out. You've got truckers that are not able to go into the port.
So are you now doing online work, Bradley, or what are you doing? Are you trying to make it on TikTok?
Canceled, flights that are canceled. The flow of
are you
freight,
retired? What are you doing since you quit?
At a slow point here, so it's very difficult.
Any sense of how long these port closures last? What have we seen in China before?
Well, this is actually the third time this port has been partially shut down because of the zero tolerance COVID policy
You
that
quit
China's
by getting
instilled.
paid by
And
paper
they've been
money.
closed those 3 times in 6
So what? Now you're
months.
working
So
online
this
for
is not the
digital
first
money,
rodeo
for
that
crypto?
logistics managers have gone into. The Chinese government has told one of my sources, Schiffel, which is a digital freight forwarder, that they're looking at least at 14 days for this partial closure. And Maersk is sending out alerts to their customers about the same delays as well as the shutdown of warehouses as well.
To what extent, Lorianne, is this sort of zero tolerance that China's taking related to the upcoming Olympics in a way that perhaps as we get further into the year, they might not repeat it? And is this lockdown only because this
Yo,
shutdown
Crypto
only because
Richie,
of their zero tolerance on COVID?
join the live.
China's had a zero tolerance platform as it relates to all
Crypto
things
Richie in the
logistics
house.
and just in general since pretty much day one for COVID. They have the lockdown measures, as you know, in Beijing. But to show you the severity, if you will, of the restraints, you have 200 vessel operators that pilot the vessels out in quarantine.
I didn't know there was an
because
earthquake
2
in Japan.
pilots tested positive for COVID.
Nice.
And for the truckers that are trying to get into these ports,
Buy a
well, they
Bitcoin
need to
miner.
have 2
Link in
negative
bio.
COVID tests in order to get in. So this is something
Interesting.
that
Here, I'm going to give you an invite. Come on the
and
live
one
stream.
logistics CEO that I've spoken with
Jump
said,
on the live.
until this zero tolerance is taken away with the Chinese government, we will continue to have these hiccups in the supply chain.
Have U.S. companies, Lorianne, figured out any workarounds now that this has been going on for so long and China has been so strict?
Yo, dividends are us.
They're trying to move to other ports.
What's up?
But what happens is,
Oh,
I spoke with John Monroe of Monroe Consulting, who actually works on the U.S. arm for the Alibaba vessel called Ship Transfer. They're trying to avoid Ningbo, and they're going north to another
Thank you,
vessel,
man.
like a small vessel.
Yeah, holidays were good.
The
The dictator got sick, so I have to do the dishes.
Either Shanghai or Ningbo from the water, but that all takes time, and then you have to reallocate appointments to get on additional ships. So that's all that they're doing, but it's all just
Nike to the
system.
moon.
A hot mess, as you say. Lorianne Morocco, thank you for joining us. Keeping an eye on the Chinese ports. We appreciate it. Mike, as we wrap up
TV is
the
kind of
show,
whack. You're right. You don't
another
need it.
strong day for
You
the
got
Dow,
TikTok and
that
YouTube.
is just reflecting the strength that we saw in places like banks and industrials and energy companies, which are at the top of the market, and weakness in technology. And you wonder where this goes, if we're going to keep seeing jumping yields every day and this sort of continued split in the market.
Yeah, pretty key point for yields, as we were showing before, very close to that upper range we've been to for the year. So we'll see if it has multi-day momentum.
All right, cool.
Behind it.
I'm probably going to actually restart this live stream. I got to get a hold of Party Finance. He was supposed to come live with me. So let me answer this question. I see Tesla growing, man. I see Tesla's stock price, maybe getting to 1,500, if not, maybe 2,000. So Tesla's going to keep growing, man. I think they're going to get bigger and bigger, and people love their products. And maybe Tesla will do other products like a Tesla phone. I wouldn't be shocked to see Tesla get in the phone market, But okay, so I'm gonna redo my live. I'm just gonna hit up Party Finance, and we're gonna do a double live together. So give me like 5 minutes.